Good morning, everybody. Mike Tedeschi, investment strategist over at Perspective Wealth Planning. This week's video is going to be pretty short. Even though we had a couple of major news events happen this week, it hasn't really changed the price of the markets that much. So, of course, over the weekend, there was an attack on the Saudi oil complex, and that cut off about 50% of the Saudis' oil supply, which in turn is about 5% of the world's oil market. That sent oil prices soaring at the open on Monday. We'll talk about oil. We'll talk about the price of gasoline here. But the other major news event was the Fed decided to cut interest rates another 0.25%. And based on the market's reaction yesterday during that announcement, that information really was baked in. And I think the market was looking for a more dovish commentary about additional rate cuts, etc., which it didn't get from Powell's speech. So if we zoom in on the S&P 500, before the announcement, we were basically at that 3,000 level. We dropped about 0.75% and then turned around and got the majority of it back, closing essentially at the same spot as the day before. So flat action there for the market, and that, of course, was pretty much the way the entire week went. So if we zoom out and we take a look at the weekly chart, the Friday close was 3,007 on the S&P, and right now we're sitting at 3,006 3/4 on the S&P. So we've moved 0.25% this week, given the Fed and the oil shock. So between those two things, the market really has not made a move. So we are still we analyze this, we're still right at that resistance zone, at that all-time high. And of course, if we take a look at the channels that were drawn on here a second ago, we are still trading inside that channel, and that would put that target, if we were to break above those highs, back up at that 3,100 level that we talked about last week. Now, let's take a look at the price of oil here. So over the weekend, the price of oil jumped about 15-16% there at its highest, and subsequently has fallen back down, but it is still up about 9% from when the news came in. And if we can look at this, we had, over the course of this year, a set of lower highs, which now has finally been negated. And we had a potential essentially wedge that's in here that we did get that break above. The major resistance level that I do see on oil really is that 61 zone. That acted as resistance there at March. It acted as support in April. It acted as resistance again there in July. And we did get over it briefly, but now we're back underneath of it. So I think the important zone to watch, given the geopolitical risk here, is that 61 level. Above 61, then this chart kind of changes, and we have the potential to head back up towards that 66 zone. And we back oil chart up even further, and we take a look at this on the weekly, right? We can still see, and monthly, we can still see a very depressed market. So way off of where it was a number of years back. It's been essentially trading in, really a 65 is kind of that upper end of that range for any terms of holding zone, and bottom end being about 40 now for about 3 years. So even though there was a big shock, if we look at the monthly chart, you can barely even tell that anything happened on this chart. At the moment. So, oil bulls are definitely going to need to drive this price continually up, and I think the key, as I pointed out, was that 61 level. Now, gasoline prices at the pump should probably go up 20-30 cents a gallon here in the U.S. Very similar looking chart. Zoom in here on a daily, right? It's a it's a downtrend. Got the same type of pop that oil did, and on a percentage basis, it wasn't quite as much. We had about 14% of a pop. It's holding up about 10%, but this chart's a lot uglier than oil itself. You notice we're underneath that 50 still, 10, 20. We didn't even come close to getting above the previous area of support, which is now acting as resistance, which is about $1.80 a gallon. So this chart still looks a bit suspect. So even given the shock, again, the oil and gas sector really needs to continue to the upside to kind of negate the downtrend that it subsequently is currently in. We take a look at the U.S. dollar after the announcement yesterday. Right, we zoom in here on a 15-minute time frame. Right, we had a big pop to the upside off of the news. Subsequently, overnight, that has fallen back down to right before the news event came out. We take a look at this in on a daily chart. It is still just chopping around inside this zone. We have not really made a strong legitimate breakout, and every time we've kind of pushed up towards that 99 level, we have immediately turned back down. So again, we're still continuing to pay attention to this zone. Again, overall this week, even though we had a bunch of large news events, the markets, the indexes that we pay very close attention to here really didn't make too much of a movement. We'll have to see how the rest of this week plays out. If the market, has digested the news from Wednesday about the Fed and maybe decides a direction to make a movement on, we could see some follow through Thursday, Friday, and we'll of course be looking for that. As always, I hope you guys have yourselves a fantastic day. I look forward to seeing you guys next week. Take care.